How do you get started in commercial real estate investing? Commercial real estate offers a whole lot of benefits that residential real estate just can't compete with. And in this video, I'm going to walk you through everything you need to get started. So make sure you hit the subscribe button right now so you don't miss more videos about building wealth through multifamily real estate. I'm Seth Ferguson. Here we go. To start things off, why would you want to get involved in investing in commercial real estate? Well, there's three reasons why. And we are joined today by Triceratops. This is a drawing my son did. I didn't have the heart to erase it. He loves drawing dinosaurs. So Triceratops and I will be presenting today's video. Three reasons why you want to get involved in commercial real estate. Reason number one is valuation. In commercial real estate, we value properties using what's called the income approach. And this is different than how we value residential real estate, which uses the comparable approach. I'll put a link right up here to a video I did explaining the differences between the two approaches. But in a nutshell, in the comparable approach, if you've ever bought and sold houses before, you know, if there's 4 3-bedroom, 2-bath homes on the street, similar size, that sold for around $500, well, guess what? Your 3-bed, 2-bath home on that street is worth about $500. There's nothing you can really do to raise the value of that property. Even if you're renting out that property for a whole lot more, it doesn't really matter. Now, on the commercial side, using the income approach, the value of the asset is driven by the income it produces. So if we can raise the net operating income, the NOI, through increasing the gross rents and optimizing or decreasing our expenses, that's going to produce more NOI, and that's going to produce a higher value when it comes to selling the property or, you know, having an appraisal done, you name it. So valuation gives us a whole lot more control as investors on the commercial side, because we control what sort of value add plans we implement into our property, what sort of strategies we employ to drive that NOI up, bringing in additional income streams. So valuation is huge when it comes to commercial real estate. The second reason is scale. And if you've watched the channel before, if you've watched some past videos or listened to my podcast, I talk a lot about how I got started in real estate investing, and I got started in single family homes. And the whole time I was trying to grow the portfolio, I was fighting the scale. The scalability factor wasn't there. But with commercial real estate, whether it's multifamily, industrial, office space, retail, it is more conducive to scaling a larger portfolio. If you have a 100-unit multifamily apartment building versus, let's say, 100 single family homes, the scale is not even comparable. The 100-unit apartment building wins all day long. You have economies of scale, all sorts of different benefits, better stability, have better financing options. All of this works because we have scale. Now, in this video, we're talking about commercial real estate in general, but as you can tell by the name of the channel and all of my past videos, we focus here on multifamily. I thought it would be good, and it's important to talk about commercial real estate as a sector in itself, and then you can decide whether it's multifamily works best for you, office space, industrial, you can even get into self-storage, that sort of stuff. And the third reason why you want to get involved in commercial real estate is structuring, or more sophisticated structuring. And we're talking about syndication structures, funds. You can even do some interesting things with joint ventures and partnerships. What this structuring provides you, if you're employing the syndication and fund structures properly, is it provides you risk mitigation. If you are a passive investor coming in, your risk is limited, which is really great. And if you are a general partner, you can do some neat things to mitigate your risk on that end. This type of structuring isn't really available if you're doing a duplex or a fourplex or a single family home or condos. We're using the scale factor of commercial real estate to employ these more sophisticated but more expensive structuring options, just to make it a better investment for both the active and the passive investors. So these are the top 3 reasons why you would get involved in commercial real estate: the valuation, better way to do it, more scale, and better structuring. So how do you actually get started investing in commercial real estate if you are brand new? Well, the first thing, number one, is you want to figure out if you want to be active or passive. And I'll put a link right up here in the corner to a video I did talking about the differences between active and passive investing. And this is a really important question. And I find when I have initial conversations with people, almost everybody wants to be active, but then quickly they realize that, you know what, I'm working a full-time job, I'm providing for my family, I'm earning good income, I have this income I want to invest now. Why don't I just focus on doing what I do best every day and have an experienced team manage that capital and place it in a real estate investment and make it work for me? So I can focus on what I do best, whatever your career is, and then have a real estate professional place that capital and work it for you. So, if you do want to be active, that's great. We have lots of resources for you. If you want to be passive, that's great too. We also have a lot of resources for you, depending on which way you want to go. But this is a serious discussion. We actually have in my Discover Multifamily course that takes you from brand new to doing your first deal. We actually have a 2-week exercise that we do, really thinking about the roadmap of your investing and what that really means for you in the long term. And that's a big mistake I made when I first started investing. So even though this question, active versus passive, it seems kind of simple, you have to do a lot of inner reflection and really think hard about where you want to go with your investing, your portfolio, and what you want your life to look like in the future. So once you've figured out if you're active or passive, number 2, you have to choose your asset class. And as I mentioned before, in commercial real estate, the big 4 are multifamily, industrial, commercial, and retail, and we can also throw in self-storage in there as well. Mobile home parks is a form of multifamily. Some people like to separate it, but basically those are your commercial real estate asset classes. There's benefits, there's pros and cons. Personally, I prefer multifamily. I find it in the past 3 recessions, it's been much more resilient than the other asset classes. I've done lots of different videos on this. You have the cash flow, you have the stability. But for somebody like you, you may be interested in office space. You may be interested in industrial. I have friends who are succeeding in every asset class in commercial real estate. So it really depends on what you're looking for. But you have to research and learn and educate yourself about all the different, the pros and cons, the nuances of the different asset classes. And maybe you might come up with 2 that you're interested in, and then you can branch out from there. But you definitely don't want to just say, I'm doing commercial real estate, because you'll be a jack of all trades, master of none. You really want to focus on 1 or 2 asset classes, get to know it really well, and then you can make more educated and better decisions as you start investing. Now, once you've figured out whether you're active or passive and figured out the class you want to focus on, now you have to figure out the structuring that's going to work best for you. And this is going to depend whether you're active or passive. With structuring, you can choose to do a partnership or a joint venture. And in that case, you're using what I call the real estate matrix. I'll put a link right up here to a video I did explaining all about the real estate matrix and the 4 different pieces or the 4 components every single deal needs to have to make it work. But if you're going to use a syndication structure, if you're active, well, that's how you're going to be raising capital for your deal on a deal-by-deal basis. You'll have to learn about the pros and cons of that. Or if you're active, are you going to launch a fund? That gives you more flexibility, but then there's some added pressure if you have capital sitting and not deployed. If you're a passive investor, is a syndication better for you where you can have a say on a deal-by-deal basis on where your capital goes? Or would you rather place your capital in a single fund, have the fund manager manage that capital and have that spread over a number of deals, and the fund just goes on and has a life of its own? These are important questions to ask, and a lot of people don't think about this stuff, and they'll just start looking for deals. But this is the important legwork that you have to do up front, so you can really educate yourself, so when you do see a good opportunity, you can act on it right away, or you will actually know what questions to ask, what to look for, the nuances of the different structuring, the benefits it has, all that kind of stuff. So do this stuff up front. I'm serious. This is stuff I missed doing when I first started, and it hurt me. We're talking tens of millions of dollars ahead of where I'm at today if I only did this when I first got started. So figure out active, passive, the class of real estate you want to focus on, and then how you're going to structure it. Number 4 is education. And I've mentioned this as we've gone along. Education is huge, whether you're an active investor or a passive. If you're passive, a lot of people will just rely upon the sponsor or the person running the deal to give them the numbers, but you actually want to be able to look at them and make your own decision. You don't want to take the word of another person. You want to be able to understand, not be an expert, but just have an understanding with how the investment is structured and where things should be lining up. And if you're looking at multifamily, well, the Multifamily Conference is a great time and a great opportunity for you to meet some other investors and hear from the industry's top speakers. We've got Rod Cleef, Kevin O'Leary, Richard Wilson, Joel Block, talking about capital raising and structuring. These are the guys you want to talk to. So just go to multifamilyconference.ca and reserve your seat. It's live in person in Toronto. Once you've educated yourself, then you have to build your success team. And this is another thing we really touch on in the multifamily course. So your success team, when you first start out as a passive investor, you're going to have a lawyer and an accountant. That will expand to insurance, wealth planning, all those other people. But bare minimum, you have lawyer and accountant. And if you're active, you have a lawyer and accountant. They're just going to be looking after different things. But just talking about the passive investing side right now, you need a lawyer who is experienced in sophisticated real estate investments, so they can read through a PPM or an OM and actually explain it to you in real words what everything means. And then with an accountant, if the deal is going to be using cost segregation for that bonus depreciation and to load that depreciation up front to give you more tax credits on day one, if you don't know what that means, well, your accountant should, and they should be able to know how to use those tax credits to minimize your tax liability. Lots of times people will just say, oh, well, I have a general accountant I use, or I have a general lawyer, but they're not experienced in these sophisticated real estate investments. This is a specialty, so make sure you build that team up front before you invest in a deal, because you want to make sure you're structured and you're set up and you're actually investing in a deal that makes sense for you, and your success team will be working on your side to make sure that gets set up. So success team is huge. Educate yourself and build your success team. The last but not least is fill your funnel. And this is going to depend on whether you're active or passive again. So we talk about funnels all the time in marketing right here. So top of funnel, if you are an active investor, this is going to be your deal flow, your potential investment opportunities. You have to fill that top of funnel, then you'll be going through the process and knocking out deals as it goes along, as you do more and more intense underwriting, until at the end you end up with a couple LOIs, and then you end up with a couple, 1 or 2 deals under contract after you've looked at 200 or 300 deals at the top of your funnel. Now, for a passive investor, you're going to be doing the same type of exercise, except instead of deals, you're going to have opportunities. So you're going to be having opportunities from different sponsors, syndicators, fund managers coming in, and you're going to be looking at your roadmap that you've done when you're doing the whole exercise on figuring out what you want your life to look like, what's important to you in an investment, all the kind of KPIs, all the milestones you want to hit with your investments. You're going to be looking at all the investments you have in the top of your funnel and really looking at where you want to be, where you want to go, and choosing the investment opportunities that best take you there. With myself, when I first started in investing, I was acquiring these assets, but they were taking me this way when I really should have been going this way if I'd really taken the time to think about what I was building towards, what I wanted my life to look like. And I didn't have that roadmap, so I ended up going this way. My dream destination is over here, so I had to do a quick U-turn and head over here, but I wasted some time, and I'm trying to catch that back right now. And lots of friends I have, they've gone into the wrong asset classes because they didn't know any better, or they hadn't thought about it, and then they've made a switch. You can do that. You're far better off taking the time and doing that exercise up front. So passive investors, you have your deal opportunities right here. You can pick and choose which ones that you feel most comfortable with, the sponsors you see eye to eye with, that you feel comfortable with, that communicate really well, that are able to walk you through why that opportunity is a good opportunity, what they see in the deal, all the different criteria that you will have as a passive investor. And so you'll have opportunities up here. You'll underwrite them yourself. This is why you have to educate yourself. And at the bottom, you'll have a couple deals that you will choose to invest in. and then you'll grow your portfolio that way. So these are the 6 steps to get started. It's not rocket science, but trust me, you want to do these things in order. You don't want to jump all over the place, or you don't want to just say, I'm investing in commercial real estate. You want to be able to focus on 1 or 2 classes, really get to know them and feel comfortable with them, and that way you can make better, more educated decisions on it. So that is how you get started in commercial real estate. And if you are interested in learning more about getting involved in multifamily real estate, join my free Facebook group, link down right below. Great group of people who are always happy to help out. And if you like this video, if you found this useful, hit the like button, leave a comment, let me know what you think. And until next time, happy investing.